I've had many buyers say, this seems like it's more than 2% of my purchase price, or that's not in line with the percentage that my agent told me. I'm like, well, your closing costs are not a defined percentage of your purchase price. Hey everybody, welcome back to the Real Estate Show. I'm Tiffany Weber, a real estate attorney with Thomas & Weber, and today I am joined by my fellow attorney, Erica Henson. Welcome back to the show.
Thank you, Tiff.
We're here to talk today about probably the thing we spend the most time talking about in closings, closing costs. So I don't know about you, but that's definitely the longest segment of closings for me because you want people to understand what they're paying. And you can definitely tell, in my experience, when someone has looked at those before they got in the closing room. Closing costs, I think people assume that they are a percentage. I've had many buyers say, this seems like it's more than 2% of my purchase price, or it's that's not in line with the percentage that my agent told me. I'm like, well, your closing costs are not a defined percentage of your purchase price. I think that's unfortunately a common misconception. So we are here today to dispel that myth. Talk to me about types of closing costs.
Yes, you could have, well, let me back up. I've actually never had anybody say they thought it would be a percentage.
Oh,
so
really?
I'm surprised to hear that. Yes,
Yeah.
I've had people's eyes light up at the closing costs, maybe surprise.
Mm-hmm.
I'm not really sure, but never anybody to say they thought it would be a percentage. So it's
I hope it
interesting.
doesn't happen now that I said it.
Oh, it might. So closing costs are those things that the buyer is going to pay for, whether it's loan origination fees, whether it's appraisal fees, escrow, I guess, could be considered a closing cost, attorney's fees, the title work. So there's a bundle of things that the buyer has to pay for as part of the closing process. And we kind of wrap them all together and call them closing costs.
Yeah, and another thing about closing costs is that they are included in your cash to close and not in addition to. But that can sometimes be tough for buyers to understand because they're like, well, my closing costs were only $8,000. Why did I have to bring $21,000? That's a whole different page of the closing disclosure, and I promise we'll go over that too. But it's inclusive, but the closing costs are not necessarily the only money that you'll have into it. I love that you brought up the loan part because you highlight an important difference between cash and loan in that your closing costs will differ sometimes greatly depending on origination fees. Lender's title insurance is usually a pretty hefty part of the closing costs. But then at the same time, you're using all your cash to do the purchase. So there's a trade-off there. There's also a difference in buyer and seller closing costs. So talk to me a little bit about what a seller might see for closing costs.
Yeah, so a seller is going to see, they pay the closing attorney for preparation of the deed in North Carolina. They pay the taxes. So if their portion of the tax bill is paid at closing, and then we have what's called deed stamps or excise tax. That is a tax that North Carolina imposes anytime a property is sold, and the seller is responsible for that cost.
Yeah.
If there's an HOA, the seller may have to pay some HOA fees, and then there may be different accessorial fees, I'll call them, that the closing attorney might have wire transfer fees. Let's see.
Your payoff.
The payoff, yes.
Yeah.
If there's a mortgage, the seller is responsible for satisfying that mortgage. You could consider that a closing cost, yes. It comes out of the overall proceeds, yes.
Yeah. I like that you mentioned taxes as part of that because that's going to end up being on both sides of the transaction. You know, each party is going to pay their portion of that calendar year. There's another common misconception is that it's run on a fiscal year basis from July 1 to June 30, and that's how the taxes are prorated. People will tell us, we haven't had this in a while. I really hope this table is wood that I'm knocking on. But someone will get grouchy with us because they're telling us that we're doing the tax prorations incorrectly. The law is incredibly clear. The contract is incredibly clear that it's a calendar year basis. And that's also because the lien relates back to January 1 of the calendar year. So it will be based on the calendar year, and that each party will pay their prorated share of that.
Yep. And, going back to the HOA, some of those costs, let me back up to the contract. The North Carolina Standard Offer to Purchase and Contract says that the seller is responsible for paying the HOA documentation setup fees. And so quite often we get questions about why the buyer is not paying them. It all goes back to the contract and what the parties have agreed to in the contract. And it's standard practice in North Carolina for the seller to pay those HOA fees. A capital contribution would be on the buyer. But like I said, documentation, setup fees, account verification fees to an HOA, those are all the responsibility of the seller's closing costs.
Yeah, that's a good point. They're like, well, I'm leaving. Why should I have to pay anything to the HOA?
Yeah, and it's usually not just a couple dollars.
Yeah.
It's a couple $100, which is why we get questions about it.
And why the legislature imposed a cap, because the fees used to be, in my opinion, exorbitant.
Out of control, maybe.
Oh, yeah. Oh, yeah. So I'm visualizing in my mind that second page of the closing disclosure that breaks down the closing costs. You've already talked about almost everything on that page. Like Section A, origination fees, buying down your rate if you're going to. Section B usually has your lender's title insurance, your closing, your title search, a pest inspection if you got it. What else would be there? Oh, tax transcripts, getting your tax transcripts. So those are based on things that you can shop for or you can't. The sections B and C are broken down by that. Like what did you get to pick? What did you not get to pick, et cetera. And then later on down, you've got, the prepaid items. You got to prepay your homeowner's insurance for a year. If you're getting a loan, you got to prepay your interest on the loan from the date of closing to the end of the month. These are things that I think commonly people don't think about, especially the interest in the escrow setup. So will you talk about the escrow account and the cost you pay as part of that setup?
Yes. So if a buyer's getting a loan for the purchase of the property, chances are the lender is going to require an escrow account. And that's where the lender holds back funds every month out of the monthly payment. And they hold them back in an escrow account so that annually when the homeowner's insurance and the property taxes come due, the lender then has the funds to pay that. So at closing, the lender is going to want cushion. They want some money in that escrow account up front. And they require the buyer to fund that escrow account or that cushion at closing. So that's what is included here in the closing costs when we talk about escrow. And it varies. It depends on what time of year the loan is going to close as to how much the lender wants in there. There's other factors, maybe projections on if the taxes are going up, if there's a reassessment or insurance. That's a big one right now in North Carolina. They're looking at raising insurance rates. So there's some different factors that go in there as to how much the lender is going to want in the escrow account.
And then also there's this, most of the time, 95% of the time, there's this little line item called an aggregate adjustment in there that's negative. And if it's one of those things that if I don't proactively explain it in the closing, they're like, what's this credit I'm getting? Like, well, it has to do with the fact that the lender can only keep so much of your money. They can only put so much of your money in there to start. There's federal guidelines for this, and if whatever they have decided is your starting point goes over those guidelines, that aggregate adjustment just comes right in to get them right back where they need to be. And people are usually happy that the lender's not allowed to take more of their money than legally allowed to do. What do you think about, like, how much do you wish that a client would dig into their closing disclosure or their loan estimate when they get it? This is maybe a little bit of a setup. I think we both agree that they should. But do you feel like they should come in the door just like completely understanding it, or is it having a general idea? Like, what are your thoughts on that?
Well, it's really client specific, really. You have some clients who just want to know how much they have to pay in closing costs and they don't want to break it down. They don't want an itemized list. You have others who want to know every single detail of what they're paying for.
Engineers. I'm kidding. though it is a common trend.
So it really depends. And I don't have a set expectation for what I think someone should know walking in other than the fact that they've reviewed it. If they come in, they've reviewed it, they're asking questions, that's a good sign. I like that. I want them to ask questions if they don't completely understand what they're paying for. Coming in and asking me, why the lender charges this for the for a credit report or, those are questions I really can't answer. But it does tell me they've really gotten down to the line item level.
Yeah.
So I would say it's client specific. I want them to have some knowledge of what they're paying for, but I don't expect them to know everything.
Yeah.
But we do speak to it if they ask questions. We do go through every single item on the closing disclosure.
Yeah. And we're certainly not unique in that, though I do know plenty of attorneys that it's just not their standard practice to do it. So I don't like when people leave not understanding what just happened. So I'm glad that we do. I think that the loan estimate in this process is not given enough credit. I know it varies wildly from beginning to end, but most often it overestimates. I'd say more often than not that overestimates. Most often is a little bit aggressive, I suppose. But that is a really good time to get comfortable with the things that you're going to be charged, because it's probably going to decrease. Maybe they've given you everything that you're likely to be charged, and then based on other things of like, oh, okay, you're not required to have, you got an appraisal waiver because you're putting so much down or whatever that might be. So you're going to pay less at the closing, but getting your credit reports, the tax transcripts, all of that's disclosed before we ever even know you're buying a house. So I would submit that maybe that's a really good time to start getting comfortable with what you need to pay. I think sometimes people don't bother with it and then until they're told it's the final number. That could be the morning of closing. And that's it's never too late to get comfortable with your closing costs, but you could have been way more comfortable had you looked at the loan estimate, or at least given some decent credence to drafts of the settlement statement as they are becoming available. But regardless, we're going to walk you through it because we want you to understand it. I think, closing costs are pretty consistent across the board. There's not some magic or secret to it. And I think it's probably a good idea for potential buyers or borrowers to look up a sample closing disclosure. And if they've got an agent, like, hey, talk me through, like, what am I looking at here?
What am I paying for? Yes.
Yeah.
One thing that could be considered a closing cost is a survey fee. And a lot of times I think that people are not prepared to purchase a survey.
Yeah.
For one reason or another, right? They consider it to be something that's not a requirement. And it's not always a requirement.
At least not in our state.
Sure.
In New York State, you're getting a different answer.
It's a nice to have, but I think of it as more than that, right? But for some clients, some buyers, it's just a nice to have. But I think when we consider closing costs, it's one of the things that gets forgotten. And all of a sudden, there might be an issue with the boundary line, or the buyer learns that there's a slight encroachment of the neighbor's fence or outbuilding, but the buyer has no money left to purchase a survey or to get a survey. So I think educating clients on all the different types of closing costs and making sure they have a budget for that is a really smart idea, because you don't want your client to later have an issue because they were unable to purchase a survey. And I think now with the market calming down a little bit, survey prices have probably settled back down to a more reasonable amount, because let's face it, a couple years ago after the COVID boom, we saw some really high survey fees just due to supply and demand.
Right.
And now they've probably settled back down, like I said, to a more reasonable rate. But they're very helpful and beneficial for buyers.
Yeah.
And sometimes we see, like we were talking about the other day, these really antiquated legal descriptions. If a property has not been platted and the legal description hasn't been updated since the 60s, we really drive it home that a survey, that we strongly suggest a survey to understand the exact boundary lines, if there's any encroachments, easements, things going on with the property that the buyer could not see with the naked eye.
Right. And there may be times where we can't certify title without one. So it might not be required by some state statute, but it could be required as part of the closing process in order to verify that you've got clear title. When you mentioned surveys, it made me think about inspections and home warranties too. And I think we've alluded to it, but maybe didn't explicitly state it. And that's why I think budgeting for closing costs is so important, because there have been situations where a buyer gets into a deal, and once they realize what they really have to pay for, especially on the lending side, that they weren't anticipating, that they now don't have money to pay their inspector, or they were banking on the seller agreeing to provide a home warranty, and the seller said no, and they can't afford it. So the advanced planning is super critical here. I think that kind of covers it. That's the closing costs are what they are. It's not fun. None of us like paying them, but it's a critical part of the closing process. And thank you for being with me today to talk about them.
Thank you, Tiff.